promptly to CNS News editor Terry Jeffrey. We have the National Taxpayers Union president, Pete Sepp, and FP1 Strategies managing director, Lauren Zelt. Lauren will be joining us shortly. All right, Terry, play this out. How likely is it that the tax cut that we see on the corporate front, we'll get to the individual rates in a second, will be immediate?
I suspect they're going to phase it out, Neil, phase it in, Neil, and I think the reason they're going to do that is because they're probably looking for a way to give more in terms of the state and local income and sales tax that they were going to eliminate. I think they need to do more to mitigate that, and they got to pay for that, and they may do it with phasing in the corporate tax. Basically, the bottom line, the Republicans are being way too timid and defensive in the way they're going after this tax deal. In the beginning, they said they want the tax code to be as progressive as it is now. It's too progressive. But and you heard President Trump, he's saying we're not going to cut taxes on the rich. They're very defensive about that. They need to be more aggressive.
So. Very much so. And regardless of using the subject, I mean, if they don't cut taxes for the upper income and, in fact, raise them, as might be the case, Pete, Sepp, where does that leave you and your group?
Well, sooner in phasing in these tax cuts is obviously better. You get better economic growth, better wage and job creation, more opportunities for the middle class. Now, historically, Ronald Reagan's major tax cut was phased in over 3 years. The last tax reform over 2 years. But here's the big thing. They've been talking about a 5-year phase-in. The difference between 3 years and 5 years for a phase-in is not 2 years. It's much bigger than that. When you think about it, if we condemn this to a 5-year phase-in, it might not be until either President Trump's second term or some other president's term when this whole thing is completed. That's a big political risk.
Another president of another party could easily dismantle it in that event. But, Lauren, one of the things I do notice is leaving the corporate rate out of it, which would be significant, taking it from 35 to 20. That's a big deal. Is the arguing back and forth over what to do with individual rates. They want to make sure, whether they're gun shy or not, whether they're trying to stick to this promise to make it middle class, that the rich not get a benefit. Now, this is news to some who are rich, who are then finding out, wait a minute, I signed up to the possibility that I might not get a tax cut. Now, a lot of them are realizing they could get a tax hike. We'll know for sure tomorrow. How will that go down, you think?
Well, you know, I think you're right. We don't know for sure until tomorrow. But what I do understand that the House Republicans are working on in debuting tomorrow is something that works for all Americans, but specifically does target middle-class families to help make, put more money back in people's pockets and to help our economy grow. I mean, look, the reality is we have to do something about the corporate tax rate. We have the highest corporate tax rate in the Western world. You know, it hasn't been updated in 3 decades. And the thing is, you know, we saw a couple of weeks ago cities across the country competing for the second location for Amazon's headquarters. Why is that? Because cities are desperate for job creators to come into their local economies and create good-paying jobs for hardworking families.
Well, there is that. You know, Terry, another thing as I look at some of the possibilities is it's going to be tough to sell, a deduction that people have gotten used to for state local taxes. And to say that might go. There's other talk that it would go for everyone but the rich. Another issue is the 401k contributions. Very popular with a lot of Americans, possibility that that deduction will be lowered substantially, if not eliminated. How is all of this going to go down? What are we going to be left with? I mean, I know it's a gut call on your part, but what do you think we'll be left with here?
Well, this is, I think, what the Republicans need to worry about and what taxpayers need to worry about. They're going to double the standard deduction. So a married couple gets a $24,000 deduction if they do not itemize their tax deductions. Lower income people, a lot of them are going to drop out of paying income taxes entirely. But who you have to worry about, and Americans out there ought to think about themselves in this context, you have a married couple, they're raising kids, they own a home, they pay a mortgage, they both work, they're putting money in a 401k, and they're paying a ton of taxes to their state and local government. They itemize. Are their taxes going to go up because of this Republican plan? They very well may. And if the Republicans do that, what it means is they're taxing their core constituency. Exactly the demographic that made Trump president could get effectively a tax increase because the Republicans have promised to keep the tax code progressive and are eliminating exactly the deductions that traditional middle-class families take.
Well, you know, Pete Sepp, the argument that has been made is the rich will do just fine with this. I'm going beyond the middle class here, by the way, Terry. I apologize. But Pete, that the rich will do just fine because the corporate cuts alone, business-related taxes alone coming down, they'll make out, you know, like leprechauns. What do you make of that?
Well, obviously, there's a huge pass-through to wage earners and others, as well as shareholders, when the corporate rate gets cut. As much as 70% of the rate reduction shows up in people's paychecks or shareholders' dividends. So that's an important component. You take a look at small business owners who might be upper income. They're going to get a 25% maximum rate on their business pass-through income. You take a look at other changes, such as the death tax being eliminated. I think that all of these combined will be helpful.
I seriously doubt it'll be eliminated, but you could be right. But Lauren, finally, what do you think of the odds of this getting done, signed by the end of this year, as the president wishes?
I think the odds are good. You know, they're going to unveil the legislation tomorrow. They're going to mark it up next week, and hopefully a full House vote prior to Thanksgiving. So it'll be through the House by Turkey Day. I'm very confident.
Wow. Okay, we shall see. Guys, thank you all for taking the time you did.